Hello traders everyone, and welcome to our new free video analysis. As you know, we skipped the webinar on Monday, but as promised, I said that I will deliver a new free video analysis. So it's Black Friday, day after the Thanksgiving. So even today, markets can still be in this holiday mood. So we will see if any potential breakouts could really provide more direction for next week, or is this just some intraday noise? But before we go to some of the analysis, in which, by the way, I will cover some of the major markets like normally I do. Let me bring attention to this Black Friday sales. So if you're looking to join our services, our community, we have the Black Friday sales. You can save up to 60% on our yearly plan, and also you have this discount for the first month of our services, so make sure to check this out. Now firstly, I want to look at the US yields, well, and or maybe better to say US notes. Now we are seeing some very interesting reversal. I think that this market is bottoming and that the US yields are forming a top. We have also seen last week reported that US inflation came down from 3.7 to 3.2. The expectations were 3.3% on the yearly basis. So we have a pretty nice inflation figures that are cooling down. But still, then we got the FOMC minutes this week, which somehow reminded us that their 2% target is still far away. Okay, so maybe that's the reason why we are seeing over the last 2 days some rebound on the US yields. We are also having these holiday reversal patterns, meaning that when there are important holidays in the US, the market could potentially change the flows because of the taking, position adjustments, and so forth. So it's not a surprise to see that market come down a little bit and that US yields are coming to the upside. There are also some profit taking from the stock market as well, obviously, because after all, we have seen some very nice move to the upside. So the US yields, I think they have topped. Okay, we've been talking about and tracking this fifth wave for a while, and what's the most important is that this intraday drop that I will show you in a second is made by 5 waves. So if we think that even if just temporary correction will take place, then we know that dollar index should stay in downtrend. So I think that in 2024 we could see at the start of that year we could see easily market headed towards 100 level. Okay, when the US yields are now in the corrective phase. So we've been looking for this nice weakness here on the intraday charts, but looks like that this recent wedge pattern here could potentially cause more upside on a pullback. Now, if we are really in a higher degree pullback, watch out for the 38.2% as a minimum objective and the potential resistance from where I would be looking for a next sell-off, okay, or maybe even higher level. So the idea is very simple here. US yields, I think, have topped, at least temporary, and we'll see more weakness after a rally. That means that also US dollar index should see more weakness. So I think that if we get a little bit higher here on the US yields, this could give us even better levels on dollar pairs for potential shorts of the US dollar. Okay, so looking here also in this chart, which is, by the way, is probably the most important chart when it comes to correlations to know where the markets could move based on the US yields. So if really market believes, speculators believe that Fed is done, that the global central banks globally are actually done with the hiking rates, then we really are going most likely to see lower US yields, and this could potentially mean that dollar index will move to the downside. And at the same time, which maybe can be the most important, is that stocks could see more gains. So looking also on stocks here, the S&P 500, I adjusted the wave count here a little bit because we have a pretty nice aggressive move to the upside. Firstly, here this. Okay, so here's the daily chart, and actually what I'm looking at is the potential very big ABCDE triangle. So we'll see if maybe at the start of or at the end of the November or at the start of the new month, we could really see maybe this resistance to hold. Okay, it's a trend line connected from these all-time highs. So as long as this trend line holds, I think that there is a chance that we will see a pullback. So we either are going to see a pullback here for a wave E to complete the whole triangle, or maybe even for a wave 2 or wave B of some different interpretations. But for now, that's my primary interpretation, triangle within uptrend. So in 2024, I think that we will see new all-time highs. And even with another wave count here, which by the way shows that this recovery here from 2023 lows is actually overlapping and corrective, but even this one has room for more gains because this, if it's a 7 swing move, still has a few missing legs. Okay, so even a way B can move to a new high as a potential flat part of a flat correction or running flat or running triangle. So in either case, as I said, because we have seen a pretty aggressive move to the upside over the last 2 weeks, I think that the next pullback, let's say towards 4,400 or 300, could be a very interesting opportunity on the upside. So at least at these levels, it's a little bit overstretched move here on the short term. Also, you're at the major resistance line. So clearly, pullback here could be very interesting. Also, as I said, if the US yields could potentially see a bit of more upside now in this current consolidation, I think that maybe that's another reason why the US dollar could see more upside just short term, and this could bring down stocks as well. Now, looking at euro dollar, we have a pretty nice recovery here. What's the most important of this current chart is that notice that I have a base channel here. Okay, so if you don't know what is base channel, just Google Jeffrey Kennedy's technique. Okay, channeling technique. So what's here? Well, notice that that was a pretty strong aggressive break to the upside above 107.55. Okay, and this what caused a very sharp move in the pretty in a pretty short period of time. So normally that represents wave 3, and I'm very confident to look and track this as an impulse, especially when you have, after this strong move to the upside, quite stable price action. Okay, so we haven't seen any kind of aggressive selling here just a few days later, but we are still actually turning quite close to these highs despite the holiday season and some different flows. So what I'm thinking is that this is a wave 4, but I'm not really sure if wave 4 is done. I see some very nice support here around 108.30, around there, from where I would be looking for more upside. So maybe wave 4 could unfold to be a little bit more tricky, more complex, but definitely that's some short-term resistance that should not be overlooked. But on the opposite side, the interesting support for a bounce is definitely here around 108.30. If suddenly, let's say that I'm wrong and we see price coming to the downside and then overlaps this 107.55, let's say something dramatically happens at the start of next week, then obviously this will change the picture here. Okay, and I could still start looking down for the euro dollar. So for now, with bearish yields, with bearish US dollar, with bullish stocks, I just think that euro dollar could, and especially some commodity currencies versus US dollar, could see some very interesting opportunities on the long side. But I still think that there is slightly more room for to try to look for better entries, better levels. Okay, so as I said, 108.30 is very interesting support. Now let's take a look on crude oil. So crude oil came to the downside. We've been discussing and tracking these final stages of this wave C. So what's going on is very nice volumes are here at the recent spike lows. So this normally means that the flows are changing, okay? So because you have an increase in volume. So it means that even market could change the direction. So I would not be surprised if we see some more upside, even if you try to look at the price chart here, just from a poor technical perspective, you have potentially head and shoulder bottom formation. You're also testing this upper trend line of this channel. So I think that there is room for more gains. I would be looking, even if that's a corrective rally, by the way, I think that there is room for $79, $80 per barrel, as long as we are holding this $74, okay? But drop below that level would complicate things, and then this could even, who knows, could even be this like a potential triangle on the way down. Okay, okay, so here, as I said, we have potential bullish development. So what it means is that there could be some more gains coming in favor of the Canadian dollar, while the US dollar maybe you could look for it that will come to the downside. But if we see a major move to the upside on crude oil, okay, that's very important. Then again, inflation will come back, will be again very important topic. Okay, it could again tick up because higher energies, as you know, equals to higher inflation, and that means that Fed should lift rates further, and this will be supportive for the US dollar. So if we see any aggressive buying here, let's say stable price action to the upside on crude oil that will last from 1 to 2 weeks, then this will definitely have an impact on the US dollar. So that's definitely something that we have to consider. Now let's take a look also on gold. So if I think that US yields or yields in general globally are approaching the end of the cycle and that new cycle will show up in 2024, there are even some speculations that there will be more cuts coming. Then if that's the case, then I think that lower US yields, lower US dollar will be supportive for metals. Okay, so I still think that we have a major breakout here coming on gold. And I really love how the price action so far is unfolding. We have seen a pretty strong move to the upside and then some pullbacks. Okay, but this pullback, not sure if that's enough. After that very strong move, we could definitely see something longer and more longer in time and more complex, maybe in price. We will see. I'm trying to compare this potential left shoulder of the head and shoulders pattern with the current one. So if maybe, let's say, we are not going to see any major break higher here in the next week or at the start of December, then maybe something more complex could occur here. So for now, I still think that that's some very important major resistance. Keep in mind that you are trading around $2,000. So clearly this level may not be broken out just yet and that easily. It was very important and strong resistance when you look here at the previous price development. So for me, price is trading at the resistance, maybe not I'm not interested in any kind of a longs here. But if suddenly, let's say that the price from any reason would come back to the downside, then I think that major support would definitely still be here around $1,900 or so. Okay, so I still think that in any case, yes, maybe there will be a break to the upside next week, and then we'll see straight move to a new high. But if we'll keep consolidating for next week and not going to see any kind of a major break higher, above this 2000 level soon, then I think that complex correction is something that we should consider. Okay, now also looking at dollar Mexican peso, we've been short dollar Mexican peso after this wave 4 rally, but looks like that we are now approaching some key support here for a wave X. So 17 around 100 around figure is also very important. But I think that there will be opportunities on the short side still, but I'm just observing this pair very closely to see if we can get any kind of a wave 4 rally here. I just think that there can be an opportunity on the downside, because looking at the daily chart, we clearly have plenty of room for this wave 5 to unfold. Okay, so definitely looking for more weakness here. Now finally, let's take a look on dollar yen. So now when you have the US yield coming to the downside, when the US dollar can be weakening, Bank of Japan is certainly watching these developments, and they realize that maybe dollar yen could be pulled to the downside without the need of intervention from Bank of Japan. Okay, so maybe some speculations are now off the table. But what is also still very interesting here is that that's still an uptrend. Okay, no matter what we think, still dollar yen is holding some support. Okay, but even if you want to be maybe short, you want to short US dollar, I think that they are just much better currency pairs than dollar yen. Okay, if you want to be long dollar, maybe that's the different scenario, because it's still, after all, for me, it's still an uptrend. Also, from technical perspective, we have retested these levels here back from October of spike once more, and we haven't seen any break to the downside. Okay, we have seen a reversal higher actually. So I think that if the US yields, as I said earlier, potentially stabilized after that 5 waves down, and you're now in a corrective phase on the US yields, which by the way it's part of a downtrend, then even this temporary corrective phase on the US yields could potentially send dollar yen close to the highs. Okay. However, dollar yen, even if there can be some room for more upside, I'm not really interested in this pair because I know that something suddenly unexpected can happen on this one. But I certainly think that there will be opportunities on the short side if we break this major 147 support. Okay, but as long as we are above it, I think that there's room for more gains. Also, keep in mind that we still haven't seen a retest of this October 2022 highs, exactly from a year back. Okay, we came pretty close here, but not really breaking out yet. So I think that this fifth wave um, could potentially clear these highs out before market maybe will turn back to the downside and face limited upside around 153 to 154 levels. Traders, thank you very much for your attention. I hope that you enjoyed this presentation. So once again, if you are interested in more of those analyses, I welcome you to check our Black Friday sales. Traders, enjoy your weekend.